Hello everyone, this is Muhammad from StarseedFX. Welcome back to the channel. Today we are going to continue our lessons on how to mark important levels on the market chart before entering a trade. This is the third session of our training where we learn how to identify key market levels. In today's lesson, I will explain how to use the Fibonacci tool in both uptrend and downtrend. But before we get into today's topic, let's do a quick recap of what we covered in the last two sessions. For a valid pullback in a downtrend, we need to confirm that the high of the most recent bearish candle is broken with a candle body, not just a candle wick. So here I have this bearish candle is the most recent bearish candle of the trend. And why this is the most recent bearish candle? Because it broke the low of the previous candle with its body and also closed with the body lower than the previous candle. So it's also important to identify your most recent bearish candle. For example, if we go up here, this bearish candle does not represent the most recent bearish candle when the market price was here. Why? Because if we see the previous candle here, its low was not broken by the next candle. But this candle here was the most recent bearish candle after this candle. Why? Because it broke its low with a candle body and also closed with the candle body, and the market started to make a series of new recent bearish candle until this candle here. So to have a valid pullback, we need to confirm that the high of our most recent bearish candle is closed with a candle body. So let's mark this candle here and wait for its high to be broken with a candle body. Now we have a new recent bearish candle. Why? Because it broke with the body the low of the previous recent bearish candle, and here we see 2 candles just swept the wick of the recent candle, did not break lower with the candle body, so neither this candle or the candle can represent the most recent bearish candle, but this candle here is our most recent bearish candle. So to have a valid pullback and confirmed lower low, we need to confirm that the high of the most recent bearish candle is closed with candle body. Now we have a new bearish candle, but this is not the most recent bearish candle, again for the same reason, because it did not break the low of the previous candle and did not close with its body lower than the previous candle. Now we have the high of our most recent bearish candle broken with the body of this candle, and this candle also closed with its body higher than the high of our most recent bearish candle. So I have a valid pullback, and by having a valid pullback I also have a new lower low of the market. Now what next? What we are waiting for? We will be waiting for a new break of structure, and to have a new break of structure we need to confirm that the lower low is broken with a candle body, not just swept with a candle wick. When I'm saying broke with a candle body, that means that a candle closed with its body lower than the low of the lower low level here, not just a candle sweep or not just a candle wick. What if I have extended wicks here? It will be included to the level that need to be broken with a candle body. This is example we are going to see along the way when we are marking our market. Now if I extend this line here, I have a new break of structure. Why I have new break of structure? Because this candle closed with its body lower than the lower low price or lower low level here. So I have a new break of structure, and by having new break of structure I will search for the highest price of this retracement movement, and that price will be our new lower high. So here this is the highest price of the retracement, and I will mark it as a lower high. That's what we have covered in the last two sessions, how to identify our valid pullback. And by having a valid pullback, we have a new lower low of the market because we are in a downtrend. And to have a new break of structure, the lower low level should be broken with the candle body, and that candle should also close with its body lower than the level of our lower low after we have a break of structure. And to mark our new lower high level, we need to trace the retracement movement from the confirmed lower low until the highest price of the retracement movement before it goes down again. And the highest price of this pyramid is our lower high price. Why it is important to mark this price like this? Because now I will start to use Fibonacci to mark our trading zone. As I said in the last session in StarseedFX, we are using the ABCD strategy, and to confirm or to find precisely the price of the lower high is very important in order to start using Fibonacci tool to mark our trading zone. Okay, now we have our lower low, lower high, a break of structure. What we need to do, start using Fibonacci. How to use Fibonacci? We are going to use Fibonacci from left to right or from the top to the bottom. So we are going to start using Fibonacci from the highest price here of the lower high, going down to the recent price of the market. Okay, as we are on a downtrend, we are going to trade when the market retrace back to the premium zone. So I will mark this zone here as premium zone. What if the market keeps going down like this, for example? I will extend my Fibonacci as long as the market is moving down, and I will also adjust my trading zone until I have a new valid pullback here in this zone, maybe low in a lower zone, maybe it just happened right away. I don't know when it will happen, but I will keep following the market until I have a new valid pullback. Once I have a new valid pullback, I will stop adjusting my Fibonacci and I will stop adjusting my trading zone. I will just wait for the market to retrace to our premium zone to start finding a new trade setup. Let's see how the market will go and how to use or how to take advantage of this marking. Now the market is moving down. I will start adjusting our zones. Here I should adjust Fibonacci like this and also adjust my trading zone. Why? Because this bearish candle here is the most recent bearish candle, and what happened, its high is broken with a candle body, and this candle also closed with its body higher, so I have a confirmed lower low. By having a confirmed lower low, now I'm done with this leg. All what I need to do is just wait for the market to retrace to my trading zone. It can just go directly, it can go like this, make several movements and then reach our trading zone. Once the market reach our trading zone, we can find the sell setup to trade. Let's see how the market will move. Now the market reaching our trading zone. Later in the coming session, I will of course explain how to trade the premium zone on a downtrend and the discount zone on the uptrend. But for now, I'm more focusing on finding the market structure, because without knowing the right market structure, all our setups could be wrong. And when we buy, we hit stop loss. When we sell, we hit stop loss, and we don't understand why it is happening. So right now, if the market broke our lower low, of course, we are going to repeat it again exactly the same way, as you will see in the coming minutes. Now, the market respected our premium zone or our trading zone for sell when we have the right market entry from the 61.8 or even from the 50%. We have a successful trade. That's good. But now we are looking for a new market structure. How to find a new market structure? The first thing we need to confirm is that a new break of structure. How to confirm a new break of structure? We need to confirm that this lower low level is broken with a candle body. So if we draw a line from this price here of the lower low to this candle here, we can see a break of structure, even though it is with just a very small part of the candle body, but still confirm a break of structure. So as I have a break of structure, I'm going to look up again at the highest price of the retracement movement. Let me delete this one for now, and let's delete Fibonacci to find exactly our lower high or new lower high. So if you're going to draw a line from this lower low following the market here, not this one, we just go to the highest. You can, if you want to trade, if you want to follow it step by step or pullback by pullback, it will be like this. Okay, but what I care more about is what is the highest market or the highest price that the market has reached during the retracement. And by eyes I can see that this price here is the highest price the market has reached during the retracement before or until the break of structure. So this price here is our new lower high. Okay, so again I have lower low, lower high, break of structure. Grab Fibonacci tool again, the same way we draw Fibonacci from the lower high to the recent market price after the break of structure. We mark our trading zone between the 100% and 50% levels of Fibonacci. Okay, and this is again our premium zone. Now I have a new valid pullback and I have new lower low. Why? Because I have the high of the most recent bearish candle plus the extended wicks of the following candles are both broken with the body of this bullish candle. Now that you can see, there is different scenario to confirm your valid pullback. How? We have the most recent bearish candle, its high was swept by the wick of this candle plus the wick of this candle. So to confirm a valid pullback and having a new lower low, we need to have the high of the most recent bearish candle plus the highs of the extended wicks following the most recent bearish candle should both be broken with the candle body, which happened by this candle here. Okay, so this is something important that you need to consider when you are confirming a valid pullback, because some traders may think, okay, this is the high of the most recent bearish candle and it is broken by the candle body. Yes, it is true, but this candle body did not break higher than this wick plus the extended wick of this candle. If the candle body, if this bullish candle I'm pointing here closed a little bit higher and closed higher than the wick of the previous bullish candle, I could have considered a valid pullback from here. But since the body of this bullish candle did not close by candle body higher than the high of the most recent bearish candle plus the extended wick of this candle, I don't have a valid pullback in this zone. So this is something really important to consider and to remember when you want to confirm your valid pullback and new lower low in a downtrend and new higher high if you are on uptrend. Okay, so now we have a confirmed valid pullback, we have confirmed lower low. I'm not going to adjust Fibonacci or trading zone anymore. I have everything here confirmed. just waiting again for the market price to retrace to our premium zone and then start finding a market setup for sell, or if you prefer to trade your premium zone or sell zone from a lower time frame. Everything will be covered in the coming sessions, but as I said, now we are just focusing on how to mark the overall structure in a downtrend and uptrend. Now the market retrace to our trading zone or to our sell zone, and once again I have the lower low broken with a very small candle body here. If we extend the line from the lower low level to this bearish candle, we can confirm a break of structure, and that showing you the size of the body does not matter. The most matter is that the body closes lower than the lower low level. Okay, so once again I have a break of structure, need to find our lower high, and our lower high, of course, as I said before, it will be the highest price of the retracement movement. So our lower high will be here. So what I need to do next is to use Fibonacci again from lower high to the most recent market price. Be ready and waiting for the market to retrace to our trading zone or our sell zone between 50% and 100% Fibonacci. Okay, now I need to do a little adjustment for Fibonacci. Here the market just touched our trading zone or the 50% level and directly reacted downtrend, but I don't have a break of structure yet. And where do you think our new break of structure will be confirmed? Of course, it will be confirmed at this level, which is the low of the most recent bearish candle plus the extended wicks that are lower than the low of the most recent bearish candle. So if I have a break of structure, it will be confirmed here if there is a candle body break this level and close lower. Now I have a new break of structure. What I need to do is to mark our new lower high. Let's just delete this. Where is our new lower high? Again, it will be the highest market price or the highest price within the retracement movement. So if we have our retracement movement from this candle here to here and here, and this is the highest price that the market reached during the retracement, so this is our lower high. And again, we are going to repeat what I have done in the previous examples. Now let's move to the uptrend example. We will start by finding our valid pullback, marking our new higher high, then wait for a break of structure, mark our new higher low, and then we will learn how to use Fibonacci to mark our trading zone. So as I explained in the first session, a valid pullback on uptrend, the low of the most recent bullish candle should be broken with a candle body. This candle here, this candle is our most recent bullish candle. And why this is our most recent bullish candle? Because it closed with its body higher than the previous candle. So this become our recent bullish candle. We move the chart. Here I have a new bullish candle closed with its body higher than the previous candle. So now I have a new recent bullish candle. So to confirm a valid pullback, I will use our new recent bullish candle. Now this candle just swept the low of the most recent bullish candle, did not break it, did not close with its body lower than the previous candle, so I don't have a valid pullback. But what I'm going to do is that I will add the price of the extended wick here to confirm our valid pullback. As I explained in the first session. If I have extended wick lower than the low of our most recent candle, we include it to confirm our valid pullback. So to confirm our valid pullback, we need this price here to be broken with a candle body, candle to also close with its body lower than the price that I mark with the red line. Market start to pull up again. Now I have a lower wick here, so I will move my line to the lower wick or to the extended wick. So to have a valid pullback, you already know we are going to wait for this price to be broken with a candle body to have a new valid pullback and new higher high. Now I have a valid pullback because this bearish candle broke our level here with its body and closed with its body lower. So I have a new higher high. After having new higher high, to have a break of structure, we need this higher high level or price to be broken with a candle body, and of course that candle close with its body higher than the high of the most recent bullish candle. Like this candle here, it closed with its body higher than the higher high price here, so I have a valid break of structure. After having a valid break of structure, that means I have a new higher low. If you cannot see the new higher low just by your eyes, you can draw the line starting from the highest point of the most recent bullish candle, go down to the lowest price of the market retracement until the break of structure candle, or until the high of the candle that confirmed the break of structure. You will find this price here is the lowest price of the retracement, and that will represent our new lower high. After having new lower high confirmed, it's time to use Fibonacci to mark our buy trading zone. How to use Fibonacci? We are going to use Fibonacci from the bottom to the top, or from the left to the right, whatever you call it, or from the lower high to the current market price over here. And then we draw our trading zone between the 50% and 100% level of Fibonacci, and we call it discount zone or buy zone. So if we want to buy on uptrend, we are going to wait for the market to retrace back to our discount zone. Find your market setup from the higher time frame, or you switch to the lower time frame to find the market setup for a buy trades. Of course, we can see a new upward movement here, and if that happens, we are going to adjust our Fibonacci and adjust also our trading zone to meet the new market price until I have a new valid pullback. And once I have a new valid pullback, I will not need to adjust my trading zone or Fibonacci anymore. I will be just waiting for the market price to retrace to our trading zone. Let's see how this market movement will go. Here I have some bullish candles moving up, so I adjust my trading zones and have a higher wick here. Again, I adjust it. Again, new adjustment. Okay. Now I have a valid pullback. Why? Because this bearish candle here closed with its body lower than the low of the most recent bullish candle, so I have a valid pullback, and by having a valid pullback I also have a new higher high. When that happens, I don't need to adjust Fibonacci anymore. Now I have everything set, waiting for the market price to retrace to our trading zone to start trading again. Now the market has reached our 50% level, or our trading zone, which is between the 50% and 100% level, ready to trade either from the high time frame or switching to the lower time frame to find the market setup. And then market start to move up again. Here the market did not break the higher high here for a new break of structure. And also I have this extended wick. So in order to have a break of a structure or new break of a structure, we need to confirm that a candle with its body close above the high of the most recent bullish candle plus the extended wick of this bearish candle here, which did not happen by this bullish candle. If we draw a line from here to the high of this bullish candle, we see that the body closed lower than the high of this bearish candle, so I don't have a new break of structure. And as you can see, the market retraced back to our trading zone. In this scenario, our trading zone is still valid. So if someone couldn't catch the trade from here and now the price is back to our trading zone is still valid. Market started to go deeper down, reaching below the 78%, and now we have a good retracement and a new break of structure. If we extend our line here, now we have a new break of structure. Of course, we have a new higher low. To mark our higher low, we can draw a line from the higher high to the lowest price of the retracement until our break of structure was confirmed, and that will show us where exactly our higher low is. Here is higher low. Why it is important to find precisely and mark higher low price? Because that's the starting point of using Fibonacci to mark our new trading zone. So I use Fibonacci from here to the current market price, then draw our trading zone here and call it our discount zone between the 50% and 100% level, and we will keep doing it again and again and again until we have a change of character. Now you know how to find a valid pullback, how to confirm a new higher high, how to confirm a new break of structure, how to confirm a new higher low in uptrend, and the same thing in downtrend. In this session, you learn how to use Fibonacci to mark your trading zone in both uptrend and downtrend. In the coming session, I will talk in more details about how to mark the recent trading zone, how to mark the extreme zone, and the difference between a minor change of character and change of character. Until next week, I wish you all successful trades.